Welcome to the High Rise podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
All right, welcome back to the High Rise, where we're talking all things cannabis, from American MSOs to Canadian LPs, products, and market analysis. I am joined, as always, by Emily Paxia.
Hi, everyone. Thanks for joining the High Rise.
And Matt Carnes.
How you doing? How are you?
Well, great to be back. Again, my favorite day of the week here. Get to talk about all this news. It's always so much to cover. So why don't we just get right into it? I think, this week we've got a couple earnings coming up, and maybe by the time you hear this, some of those things might have been reported. So I thought we would create a little time capsule to see, how right or wrong are we on some of these companies. Let's start with AYR. So I believe their earnings reports are today, May 26th. Matt, you want to kick us off with that?
Yeah, so it looks to me, just looking at the press release, that there was a top-line beat, a slight beat for the quarter. And then also for let me say this. They were reluctant to give guidance last earnings call for 2021. They provided it for 2022, knowing that they're going to be, ebbs and flows in terms of their integration of, their acquisitions. So what I thought was a real interesting or a good surprise was the guidance for Q2, which, by now they have good visibility into. And so it was a pretty significant beat. I believe consensus was at $78 million, and they're guiding for $90 million. So, I think what would come out of the call is just more talk about integration, their new, their acquisitions that they closed, the states that they're in, and things along those lines.
Some of
Florida,
the big news,
most profound, is a big market for them.
Exactly. That's just what I was going to say. With Liberty Health Sciences in Florida, I believe it's 31 stores that they added in Q1. So I think that'll go into some of these earnings here. More acquisition efforts that they mentioned in their Q1 earnings around Arizona, Ohio, New Jersey. So I have a feeling that that's driving a lot of that guidance. Kind of the playbook right now, it seems to be from a lot of these MSOs just scaling up, acquiring smaller shops, getting those licenses in limited license markets. Mm-hmm. Including Pennsylvania, which I know we've touched on a number of times over the last few weeks. I mean, Pennsylvania is, at a run rate of over 100 million, in monthly sales right now, which is pretty massive for a medical market, and obviously, legal market on the horizon, just given all the signals there. So lots happening from AYR. One thing I also want to touch on, they called out in the last earnings, and I'll be curious to see, they did this for Nevada, I believe only. They talked about their average basket. And their average basket in Nevada was about $62, I think they reported. And again, this is a Q1 earnings, not the latest that, will go out tonight. But at Headset, we have good basket data, and I was looking, and the basket pre-tax in Nevada is a little higher at about $68. And that's looking at Q1 of 2021. So they're a little below that. And it was interesting that they reported on that. I'm not sure why. I don't think I saw that for all the other markets. There were some that they talked about, like medical baskets in certain markets, pretty high. But I think the Nevada thing, if I had to take a guess, their stores seem to be located in maybe less populated areas, kind of outside of even areas like Las Vegas, where you probably have higher baskets because of tourism, things like that. But I thought that was an interesting call out that they made their last quarterly earnings. So it'll be interesting to see what they talk about today with respect to that.
No, I know I said I wasn't going to have much to say, but I do actually. I think that one of the aspects of AYR's business that's interesting is they are really focused on M&A, and I think that's going to be a trend in the MSO or multi-state operator market going forward as these operators try to expand their footprint and do so quickly. So that Florida grab is a good example of it. On the basket size, I wonder if there were some adjustments on that, just given that it was Q1, they're transitioning, maybe there were some adjustments that had to occur. Maybe they were going more heavily promotional, just kicking off the year and going in through that March timeline. So there's a number of things that could have been factored into it. We are seeing some settling of basket size across MSOs, not necessarily to that delta, but it is something we're watching for to see where it really does kind of settle in, because the newer markets have higher basket sizes, generally speaking. Medical markets do as well in many instances, because people are able to kind of stock up on the higher potency products and more of the products, and they tend to do so as people who are using it for medical reasons. So there's different trends that can drive that, but it will be interesting to hear what they speak to on that.
I also wonder how much, the economy and COVID has played into Q1 basket sizes, because there are pockets of instances where, disposable income is less, so people may spend less, on things. So, that's been cited in a few earnings calls, some weaknesses.
I think they mentioned something along those lines as well. Yeah, so we'll see how this shakes out for them with their call today. And then tomorrow we've got Cresco. So some big news coming out of Cresco. They mentioned they're going to be moving to GAAP reporting, which I think is the trend. I'm not totally sure, but are most of the MSOs now on GAAP, or is it still a minority?
And more are doing it because it will be required if they want to list on an exchange. And also, I think that the Canadian LPs really burned some bridges with the IFRS, with the biological asset accounting. And Matt is absolutely the expert on this, so I'll quickly volley it to him. But I think it is something that's being considered best practices. And so we're seeing some of the trends to it, but it's not easy for those who've been long on the IFRS space.
And also, I think if your investor base is more than 50% U.S. citizens, then you have to file under GAAP. So that's good to see that we're getting more investors from the U.S. in the U.S.-based companies. But the IFRS, the big difference that Emily alluded to, is the accounting for biological assets, which never made sense to me. So you have to determine what the value is when you plant your seeds, okay? Now, number one, none of these accounting firms know what the hell they're talking about. They're new people. They're a new industry, right? So you have them trying to figure out. Maybe the only people that would really understand what the value of the seeds is Cheech and Chong, because really it's just a big guess. So it was just a complete waste of time. A lot of money and resources went into trying to figure out, and every quarter trying to, assess the change in the fair value. So you plant the seeds. Okay, this quarter it's worth X. Next quarter it's worth whatever. Big waste of time. So I'm glad to see that things are now on the same playing field. That's the big difference. So when everything's reported under GAAP, it'll be great. One thing I would say about accounting is that the accounting profession really, by and large, has not embraced cannabis yet. I know that the profession now is starting to take a look at it to see, are there any intricacies around accounting for cannabis? And there probably is. I haven't given that much thought. So, as time goes on, investors may see a little differences in the way some of these companies are reporting, but we don't know that yet. We don't know what exactly that's going to look like, but you heard it here first.
Yeah, Matt, what does IFRS even stand for? I don't even know.
International Financial Reporting Standards. So basically, and U.S. is U.S. Generally Accepted Accounting Principles.
I know GAAP.
U.S. GAAP.
Yeah.
So it's just really not sensical to have all these differences. It's very confusing, and most of these differences they give rise to differences in the taxes, because the change in fair value triggers off a change in the tax provision, whatever. I don't want to totally geek out here, but there's a lot of things that are involved, and it just causes a lot of confusion. At the end of the day, who cares? I mean, this is not a cash item, and where we are in the industry, I think the most important, at least that I look at, is liquidity and how much cash the company's generating. Forget all the accounting noise.
Yeah, no, thanks for all of that. And it's great because we can start to compare a little bit more apples to apples too across all the GAAP reporting MSOs. Kind of gives us that framework. And yeah, great point. Nice trend to know that we're getting more U.S. investors. And of course, they're getting ready for uplisting. For sure, that would be ideal for all these operators in a future legal cannabis world. So beyond GAAP, what do we think we have to expect with respect to, whatever Cresco's been up to? I know Arizona, they opened some of their Sunnyside stores turned into adult use stores, so probably sizable revenue growth there. They also mentioned distribution agreement with Emerald Valley Farms in California. And, they've got a pretty sizable distribution footprint apparently in California. So scaling that out, I wonder if that's going to, drive any meaningful revenue. But anything else we can expect from Cresco here?
Well, what I would say is, sort of looking now at what the mix is of wholesale and retail revenues, because they seem to be more on the lane of trying to be, a wholesaler than a retailer. So I think, that would be interesting to see how that plays out. But and strong sales out of Illinois, of course. But I think by and large, they're moving in the same direction as the other well-run MSOs in that they are integrating and they're just getting things going. And, I think, they're disciplined in their cash allocations. And, in terms of specific markets, I think, they're in the right places. you don't really hear of any of the MSOs gunning for Arkansas. I hate to keep saying Arkansas or Montana or wherever, because there's not a lot of opportunity there. But they're planting the seeds in the right places.
Yeah, that's a good call out on the wholesale side as well. I think they do seem to position themselves a bit more in that direction, and kind of goes to a lot of the stuff we've been talking about, where you've got this mix, right? Are you retailer? Are you a CPG company? Are you a combination of that? Are you supplying the industry? And everyone has a little bit different strategy. So kind of exciting to see how this will all pan out. Another bit of news coming out of Cresco I noticed was that they recently did a survey in partnership with YouGov and their Sunnyside retailers. And apparently the survey polled 5,000 Americans, is said to be representative of the American population. And the findings were that 1 in 4 Americans consume cannabis. And that's up from 16% in 2018. So that's a pretty big number. I was surprised to hear that number. I think it's essentially two things. I think, maybe it's always been a higher number than 16%, but maybe people are now, it's 2021. Years later, more and more states have legalized, states like Montana, states like South Dakota. So, if we're talking representative population of the U.S., maybe people are more inclined to say, yeah, I consume cannabis from time to time, but also just more access. There are more stores as these markets open up, and people are, purchasing cannabis legally now. And so I think it's probably a combination of those two factors, but 25% of Americans, pretty interesting. I'm curious where like Sunnyside came in, their retail chain with YouGov, if they sponsored this, or if they were polling Sunnyside consumers, which would be strange, because I would imagine most Sunnyside shoppers are cannabis consumers. But they released this report in conjunction with YouGov, so just kind of neat to see some of those numbers and some of that growth of cannabis consumers.
That's consistent with what we're seeing in the Gallup polls and the acceptance by and large of the American public. What is it now that favor cannabis? 80% or whatever it is right now. It's ticked up quite a bit over the last few years. So it's not surprising that as more people favor legalization, more people will be consuming it. And I think a lot of the stigma is sort of kind of minimized now, as more states and, even out here, out east, it's still a challenge for me anyway, because I'm like, oh, Matt, the pot guy, and friends with, kids, small kids, they don't really necessarily want me around.
What?
Yeah.
Come on.
No, I'm not kidding. I'm sure they're going to tune in and listen to this, but not
That's
that
your
they don't want
analyst
me
work.
around,
That's
but
what
they're like,
afraid of.
like
Too much
you
math.
just, right? So, I'm not bringing over a cake with, infused cake for dessert to give your kids. I don't know, whatever. So it's
Not yet, anyways.
not yet.
Whatever. I'm the cool aunt that's going to pick up everyone's kids from the party and get them home safe. So it's all good. I think that this is interesting, and I've been spending a lot of time thinking about it generationally speaking. Gen Z is now entering the workforce in strength, right? And so I think when you think about a generational shift, they're the first group of individuals who will enter the workforce, create their own wallet, and share of wallet is going into cannabis in legal adult use markets, where it's the first workforce that started with legal adult use markets all around them, to your point, Sai, of having access. And so they get to make a decision in terms of their share of wallet. Are they going to spend it on alcohol, or are they going to spend it on cannabis? Or are they going to spend it on pharmaceuticals, or are they going to spend it on cannabis? And I think it's a really different generational shift to enter into a world where I bet they can't even conceive of what it was like to call the guy from Vermont to ride his bike over to your apartment in Brooklyn. I'm not maybe speaking from experience, but it's how we lived in a different world when it was really inaccessible on a legal level. And so I think it's a really interesting generational shift. And I also think when you track the trends of millennials, which I just found out from an article over the weekend that I'm considered a geriatric millennial, which is potentially the most horrific name I could possibly conceive. The word geriatric in front of me at any time right now is not interesting. I would much rather just be a square in the Gen X category, but I think
You're weeks away from assisted living.
Yeah, so I think it's something that we have to contemplate, these generational shifts and preferences. Millennials are drifting away from alcohol, drifting into cannabis consumption, and I think that these are the things that make it more open to being talked about and more socially acceptable. We also know, I spent a lot of time studying millennials in my previous life, and they have a very close connection to their parents. And so things flow very fluidly between those generations. So you're talking about boomers and you're talking about millennials, and there's a lot of sharing. And so I think that cannabis is being talked about in households in ways that it wasn't always. Matt, I don't know who your friends are, and I'm sorry for their...
I know. Well, they're coming around, now that it's
Yeah.
legal.
I'm kidding.
But one thing I would say, though, add to that is like the nursing homes and the real elderly folks, because at some point, a lot of them now that they're in so much pain with arthritis or whatever, they don't really give a damn about the fact that pot was legal and that they, were grounding their kids for smoking it back whenever. They just want to get better. They want to feel better. And I could tell you, I have an elderly aunt, and when I was out west on a trip, we got her a card, and I was teaching my, elderly aunt how to vape. And she actually was, in it relieved a lot of her pain. And so I think she tells two friends, and two friends tell two friends. And so that demographic is starting to really now better understand that this is a remedy for a lot of aches and pains.
It's certainly all trending in the right direction. All those points are spot on. New consumers aging in every day. Every day someone's turning 21. And they've been around legal cannabis in markets like California since they were born, since before they were born with, medical in places like California. So yeah, more normalized. And then for an older audience, legal stores have been around for years in a lot of markets. And so, those stores that maybe were strange when they opened, are just now part of the community and part of the neighborhood, and the sky's not falling. And I think, more people coming in. So 1 in 4 is a good number. Just proves that it's more normalized, every day. So kind of moving away from the MSOs and earnings and into just general industry news. I mean, speaking of like younger audiences, I know that, Colorado, that you were mentioning, they've got some new medical regulations, particularly around looping and all of that. You want to touch on that?
Sure. So, when I founded Green Wave in 2014 and I rolled up my sleeves and I wanted to think about the industry and how to analyze it with just very limited amount of information. And I thought, how did I approach things when I worked on the sell side, when I was covering satellites and, satellite radio, satellite TV, cable, blah, blah, blah. And then even when I went to the buy side and I became more of a generalist. And there's certain metrics, that move the stocks. So for cable and satellite, it was the ARPU, average revenue per unit. So I thought about that. How does something like that transcend into cannabis? Even when I was on the buy side, we covered prison stocks. And what moved the needle was the revenue per prisoner per day and the occupancy. And so when I came to cannabis, I was thinking about the medical marijuana market. What data do I have? What might move the needle? And it was the average revenue per patient. And I had that data because the states were providing cardholder counts and revenue. So I came up with, every month tracking average revenue per patient. And in Colorado, even back in 2014, it was pretty high. How could people afford like $350 a month? And some months it was really ticking up pretty significantly. And then, of course, over COVID, it was over $600, right? So how is that possible? Well, what's happening is kids, college kids, high school kids, because the age is 18, are able to just, like you said, loop, go from one store to the next store. There might be caps within a dispensary, but Joe Smith goes to one dispensary and then, 10 minutes later he goes somewhere else. So I think what's happening is that, kids are, and whoever else, because now times are tough for people, they're buying low and selling high. How to do that, but I don't mean high, but, so there's a way to make a profit. And it's unfortunate because the states are losing out. Colorado, if this was, put to rest right now, that, in Colorado, the sales tax on medical is 2.9%. On rec, it's over 20%. So there's a big difference. And so that, that patient, that basket size that you talk about, rather than being taxed at 20%, it's taxed at 2.9%. So the state's missing out. But it is a concern to parents, and it's a concern to a lot of people that this is allowable. But I'm kind of shocked because why has it taken 7 years to figure this out? They weren't buying Green Wave research. They weren't, because they would have known about it. That's my take. And so potency, average spend, kids being able to buy cannabis at a lower price, selling it in the gray market, supplementing babysitting, income or whatever it is. And, that's what's happening. And then, there's issues around potency and that type of thing. But that's kind of a dialogue that's been happening, in other states as well.
Yeah, I mean, the whole thing with legalization is controlling access and limiting access to, making sure that people that purchase it are legally allowed to purchase it, and kind of moving away from the black market. I mean, it's a significant part and significant benefit. And I think most studies show, you don't see, the sky's not falling, right? Like when markets legalize, you don't get a bunch of underage usage, going through the roof, all the fears that I think a lot of people had. And it has to do with access and, controlling it in a better way. And, if people are doing stuff like that, I mean, that's an additional cost. I mean, maybe medical because it's taxed less. Maybe there's a bit of margin to be had. But I think seems to be what they're trying to address, making it a little more rigorous around access from a medical perspective. And that's probably a good thing as long as the people that need it for medical purposes are still able to access it. And I think that's the key piece, and keeping some of the bad actors out, because that's not good for our industry, not good for legalization trends. If some of the stuff that you're saying, Matt, is actually what is happening, that's not ideal. And so, locking that down through legislation, I think seems to be a fair compromise.
And one thing I would say, just to add to that, is just during COVID, what we saw is, basically in any state, when a rec market comes into an existing medical state, it cannibalizes the medical market, because people don't want to get a card, blah, blah, blah. And so what we saw in Colorado is when the rec market came, the number of card holders went down pretty significantly. And I think it peaked at 117,000. The population's 5 million. The way I've thought about the medical market in every state when I started Green Wave was to go, qualifying condition by each qualifying condition. So how many people have cancer? How many people have glaucoma? Blah, blah, blah. That was my market size. Colorado, it peaked at 117,000. There's probably the definition of the market size that I determined was about 300,000. So it peaked about 30% of that and then downhill. And then so every year the medical market was decelerating, the rec market was, increasing, and then it kind of leveled off, kind of peaked. But then during COVID, what happened, a massive, a notable shift in the pattern of the growth. So the growth of medical went way up, the growth rate, not the actual sales, but the growth rate went way up in medical, and then rec, was a sharp deceleration. And then, like I said, the average spend per month went way up. So to me, that would suggest that folks were at that point, just a way to supplement income or to avoid having to go to the illicit market. But anyway, that's my shtick on COVID in Colorado.
Yeah. And every medical market's a bit different too, with the restrictions and limitations, and some are much more rigorous than others. Colorado was probably pretty loose earlier on, maybe tighten it up. Markets like California, I remember were pretty loose early on.
Yeah, one thing I would say about California, because there was a deceleration, it looks like, in the rec, because they provide that data. And what I would say is, it's not capturing, I don't know if you guys capture it, but the state doesn't capture. I've been back and forth with them on the medical sales, because even though it looks like California has been down, especially in Q4, there could have been an increase if you factor into the medical marijuana sales. Because in California, it's not 2.9%, it's totally 0%. So that's an opportunity to save, some money.
Sure.
Yeah, there are still jurisdictions in California that are just completely medical. So that does exist. Mm-hmm.
Yeah, that's true. There's still plenty of counties, right, that don't have adult use access. Well, speaking of markets, one more market to touch on as we wrap up here. I think Montana made some news, so finally signed their bill into law. Montana made a lot of waves. It was one of the only red states. I think Alaska was maybe the first red state, and then Montana and South Dakota. But there are a lot of apparently heated discussions in their state government. They finally got something across the line, and it sounds like people are relatively happy with it, but not as happy as they'd like to be. But it is still, I think, a win in some ways. The things that I think stand out is a pretty high tax rate at 20%. Again, going back to access and pricing is a big deal, right? And making sure that you can get it at a reasonable price is important, and taxes impact that, certainly, as we've seen in markets like California. It does have home grow. I think it's 2 plants instead of 4 plants. I'm sitting here in Seattle. We still don't have home grow, still illegal for one of the oldest original markets, which is crazy. So that's, I think, a good thing that a place like Montana is permitting that. I would say the negative is that they are introducing flower potency limitations or potency caps. And this is kind of a big concern in the industry, kind of seeing a trend like this. But that said, the potency cap seems pretty high at 35%. And this is flower, right? So this isn't a concentrate. This is an extract. You can still have higher potency, for things like extracts, but just flower on its own, 35%, which I think is pretty high just from, my anecdotal, exposure out there. There may be plenty of strains and plenty of producers that break that cap out there, but, it's not, it could be a lot worse, could be a lot lower. But just it seems to kind of crack the door open more and more for things like this. I believe it's the second state in the nation. I think it was Vermont that signaled that they're going to have some potency caps as well. Very small population in Vermont. It's a small population in Montana too. I think about 1 million residents there. So what is that, like a 20% of a Colorado market? So just some news out of Montana. I mean, it's great that it's coming together, but like every state, they're doing it a little bit differently. And we'll start seeing sales January 1st, 2022. Any thoughts on what to expect out of Montana?
I mean, I would just say that, this is still early innings. They could change their mind. They could realize that nobody wants to do business there because there's no way to make money. I mean, maybe this is an opportunity for the mom and pops, because I don't think the big MSOs are gunning for a state like Montana or any of those other states. Which begs the question, which I wonder anybody could chime in here, but if you wait too long, if you're one of these states that are really waiting too long, okay, so federal legalization happens, then then there will likely be a federal excise tax of 10, who knows what it's going to be. Then what do you do if you're a state? You're going to have to lower your state revenue, tax revenue, because you're going to then have more competition from the illicit market. So you're almost like, not... some of those revenues may be jeopardized. Budgets may not come to fruition if they get too restrictive, or if they act, if they delay things too long. So I don't know. I don't really know, and I don't understand. I don't understand why. Well, obviously every state is illegal by now, but I just don't understand what they're thinking in terms of practicality, in terms of how a business is going to operate, under some kind of confine like that.
I think that high tax rate, we've seen it play out here in California. It keeps your illicit market nice and alive and well. So you have to be really thoughtful about the tax rate that you apply to these. I mean, I'm about to hit order on my Spark basket, and I can't wait for the sticker shock of seeing the taxes pile on as I hit that order button. So, it's painful, and I have disposable income. So people who are a little bit more on a budget, they're going to struggle to find that acceptable. And I think that drift into the illicit market is very easy at that point. So it kind of defeats the purpose. And I also think that, Montana has a real issue with meth. I know this, again, from my past life, because I was doing some work for philanthropic organizations that are trying to create support systems around keeping people from drifting into the meth world. And I think that trying to understand the way people relate to cannabis versus various opioids and other drugs that are physically addictive, I should say, period, full stop. I think that Montana should be thinking about this a little differently, but you make a good point. It's a deep red state, and I bet there are more guns and horses than there are cannabis plants in the state to begin with. So, and more than people, actually. So it doesn't turn my world on fire from an investment standpoint, but I love the idea of people having access to it. And it's a beautiful place. So wouldn't it be fun to be consuming cannabis and running around the beautiful landscape there? I think it sounds pretty ideal.
Or maybe
I'd do a diligence trip.
Maybe they just wait until, interstate commerce is no longer applicable and legalization, and then, then the floodgates open, and then if you want the product and you live in Montana, so be it. You don't have to worry about, going out, and then businesses don't have to really think about, planting a stake there. They could just ship it and all kinds of things. So I don't know. It's not too many states are really left, though, that have nothing in terms of, cannabis laws or CBD or whatever, right? There's, I don't want to say maybe 10.
Our work here is done.
Yeah, if we only get Texas across the line,
oh man,
it'd be good.
Talk about guns. I know, Sai, that you wanted to bring up this thing about New York, too, about the article that came out in the New York Times. It reminds me of what we're talking about now, which is that there's always this lag time of catching up on the supply demand curve. And we've seen it in most markets when they open. And I think that it's a really interesting question of why it happens. What's the chicken and egg scenario? I think it has a lot to do with the way the regulatory framework sets the operators up to succeed or fail. And I think that the lag in that is what creates this issue in terms of being able to keep the product flowing into the shelves and onto the shelves, I should say. But in New York, it's been a pretty rough situation. I know my friends who do have medical cards there for actual serious conditions like MS have really struggled to get good products because of the operators there just not functioning at the highest level. And I don't really know per se what's happening there. I should exclude Columbia Care from this because I don't know. I don't have friends who've shopped at that location, but people who've been in some of the other ones have really struggled to get good quality product for their conditions. So it's an interesting question about why that supply-demand curve continues to be such a mismatch at the opening of these markets.
Well, you know what I would say is in New York, it's been so restrictive. I mean, out of the gate, it was ridiculous. You know, the hoops and hurdles and all these other things that operators had to go through. Even doctors, they made it really hard. Like a doctor or a physician was, I'm not getting involved with this. They made them take online courses and this, that, and the other thing. Then they laxed it up and they allowed, physician assistants to participate and all that. So it was hard to get a card and certified. And then the demand, I mean, it's particularly here in New York City. Oh, my God. And I said this before, you can get weed delivered quicker than a pizza. And so you're competing with a very robust illicit market. So if you're sick and you need your product, you're not going to, get on a subway or take an Uber or go wherever to a dispensary. You're going to have it here. And particularly because the product selection is very limited. No flour, no edibles. It was pill form. There's just a lot around that. So it's not surprising that nobody really wanted to build out their production because they knew there was no demand. And so, okay, March 31st comes along and boom, we have a legal rec market. Well, you can't just blink your eyes and have all this product there. It takes time. So that's the issue. I think, Cuomo, he just, out of the gate, he should have known this was coming years ago. And he was so adamant, no, I will not do, such a big deal for him to even pass medical. And then when it came to fruition, it was, just really baby steps, not practical. It was a call option. I mean, everybody was bleeding cash. There were some sellouts early on. Ascend came in. Maybe the problem now will be solved now that Ascend has the New York property. But yeah, it's just a mess. But it's all going to be worked out now, I think.
Well, I encourage everyone to take a look at the article. It does talk about supply shortages. There's a lot of great people quoted in there, like Ben Kovler of GTI. And I mean, these are smart people that are talking about these challenges. And so I do think it has to do with legislation. And it seems like they need to work hand in hand with the operators to make sure that, these things are successful day one because they're going to have a legal framework and not enough supplies. So take a look. If you haven't checked out that article, I thought it was pretty good. But I think that'll do it for today. Next week, I'm sure there is going to be even more news to cover. And I'm really interested to see how the earnings turns out, for AYR and for Cresco there as we covered. So should be interesting to see. And maybe we can cover some of that next week. As always, thank you, Emily. Thank you, Matt, for joining the High Rise and looking forward to reconnecting at my favorite time next week.
Thank you.
Thank you.
Thanks for listening to the High Rise podcast, presented by Headset. For more information on Headset, visit headset.io.